and welcome to the New Property Show. I'm Steve McMenamin. On this show, Beth from Home Affordability Solutions. We will have our regular panel, but first, Daniel Richards from our local expert. Daniel, welcome to the New Property Show. Great to have you here.
Thank you very much.
So the local experts, how local are they?
We're very local and we're very national. So we're all over Australia, and we're a brand new company that's taking on the services industry. And but we are extremely local. We take on local gardeners, local cleaners, local tradesmen, local builders, electricians, plumbers, and we're across most suburbs in Australia.
So essentially, maybe the way I would look at it is like a franchise.
Yep.
Franchise with a lot of referral networking. So you're taking in a job, you're finding the right expert,
yep.
Making sure they're pre-qualified, do their police checks, you're ticking off a lot of boxes. Do you want to explain really how somebody would actually come on and work for you guys or get a referral from you?
Yeah, 100%. It's actually really quite simple. It does get misguided with a franchise taint because we do have really strong branding. However, there is no sign-up agreements. There's nothing like that. Service providers can just come on board via our service provider app, and they apply. And they need to upload a police check, working with children's check, insurances, any licenses that may be applicable as well. So, and we thoroughly vet all of those service providers prior to being onboarded onto our app. So, it's quite a unique position because we actually help customers and service providers alike connect as part of our business model, and we found that through other services models there isn't that interconnection or ownership of the customer and service provider relationship. So we offer some really unique opportunities by even managing the transaction between customers and service providers. We manage the invoicing. There's a lot of benefit to becoming a local expert.
So basically, the way I look at it, and I'd like to talk about the consumers, but if a consumer uses your local expert, and they've got 5 different jobs going on, they've got a plumbing, carpentry, painting and a kitchen, they're not getting 4 different invoices, 4 different payment terms. They're dealing with one company that they've built a relationship with.
Correct.
Basically, you mean that the nasty part sometimes is the bill.
Yeah.
So you're taking the pain out of it. So from a customer's point of view, how do they engage with you, and what's the benefit of using, the local expert? Yeah,
so from a customer's perspective, there's a lot of comfort because they already know that whoever they accept into their house from local expert has already gone through the hoops, so to speak. So there's a lot of comfort to be able to say, well, they are police checked, they are insured, they are qualified to do the job that they are said to do. We hear a lot of nightmare stories out there of independent operators that are doing part of the job, taking money, disappearing. With local expert, that just doesn't happen. We have a service guarantee in place. So no matter what occurs, we always make sure that our customers' needs are always met, and we manage that transaction all the way through. So yeah, it is very, very common for a lot of people to be able to be very nervous about who they're employing to do the work and to do the gardens, because we are going to people's personal property, that we are going into their home. So to do that, we need to provide the right level of comfort and reassurance to our customers that the people that are going there are approved to be able to be there.
It's essentially almost like Scotty from the block. You're managing jobs, which is fantastic. And the bit that really caught my attention there was the service guarantee.
Yes.
So knowing, look, at the end of the day, people are people, things can go wrong, okay? You could have a tiler turn up and they could get injured, or their kid's sick and they've got to go home, and for whatever genuine reason, cannot complete the job. Now, typically, you've got to wait for that person to come back 1 to 2 weeks. In that situation, what would happen?
In that situation, if we needed to be able to assist, we'd ensure that client's job is completed in full. So we go to our network of service providers to be able to assist, and we'll make sure that occurs in full for that client so that they're happy with the result. And it is that level of comfort, it is that next level of reassuring clients that no matter what happens, you will get the job completed as per quote. And effectively, that's all consumers want, to be safe and enjoy the byproduct of their quote.
Okay, so let's talk about a couple more things then. So let's focus on 3 different types of jobs. So first one would be, if someone come to you and they've said, hey, we've got a home, we don't really know what to do, but we want to do a renovation. It's a 20 to 40 grand renovation. They want to do some aesthetics and a few things. Have you almost got somebody to help quote at that position and then delegate, hey, we'll come through the home and we're going to give it a touch up for sale.
Yeah, so what would happen, we do have builders on our platform. So depending on the information that we receive from the client, we'll always be able to send out a builder that can do part or full renovations. So, and that quote, we don't interfere with the quoting process between a service provider and a customer. We allow that to take its natural course. And then from there, we make sure that that's adhered to in full. So whether it be 20,000, 40,000, 60,000, whatever that licensed builder is licensed to be able to do, they will complete and be able to quote.
Okay. Now, new builds. My area of expertise. Absolutely love it. Typically, if you're going with a major builder, you're going to get you can get anything up to just a shell of a home. Through to carpet, through that. Have you got any examples where somebody can come in and hand over? So I predominantly focus on what's called full turnkey homes, which is fencing, landscaping included. Some of them are a little bit DIY. Talk to me about that. So your experience with new build, what's normally missing and where could you assist? So
with any new build that we've had come through our platform, it's always been one of those disconnects that you see, that client interaction is not always, there seems to be a disconnection with other builders where they don't have the relative experience to be able to go through the full design phase. But through us, we make sure that we've already got a breadth of experience in going through the whole new build process. So we make sure that obviously their credentials are in place. We've got backstock of what their previous history is. So, and any work of examples and any other licensing and what their trading company looks like. So we do actually a back end check on the company to make sure that they are who they are. So to be able to be signed off by local expert, we make sure that we're covering them off in full.
Just for fun, what's some of the smallest jobs you've done?
Changing light globes.
Perfect.
How
many experts did it take?
It took one expert, and I must admit it turned into half an office refit. So
excellent.
So it is a very, very interesting world to be in, because quite often we actually do get that. We'll have pruning of roses, and that will turn into a barbecue build or a patio design. I
think it ultimately really always starts with trust and relationship. And I think once you've got that team, they're probably therefore looking for more people. Okay, now local expert moving forwards, what does it look like in a year from now?
Well, right now we're expanding at the rate of knots. So we're not far from launching our consumer app. So quite simply, you'll be able to download Local Expert, pick the service provider you want from a menu on your app. That's launching at the start of next year. We expect that that'll also bring on WA, Northern Territory, Tasmania opportunities as well nationally for our business. So it's going to be a vast growth pattern. And on the back of what we're able to do, we're able to offer finance for a lot of the larger style work that is out there. So that finance company will be launching in approximately 1 to 2 months, so we'll be able to financially support a lot more work, and that'll be offered to our Local Expert clients via the app.
I think with that said, really it's almost like picking up a car. You kind of need the money to go with it as well, or buying a home. I think it's a really good element. Look forward, obviously, having you back and discussing that further. For anybody, I guess, that's watching as a customer, have you got a few tips with what they could use your Local Expert for? So they're going to walk around their home. What are they looking for?
Pretty much anything. We can handle any job that needs to be done, whether it be any form of plumbing, gutter cleaning, whether it be a redesign, a wall build, installation of a TV, whether you want new floors, new windows, new doors. Talking about the sustainable piece, there is a lot of interest now in door and window replacements. There is a significant amount of opportunity, but we can handle all of it with the right people.
Excellent. Mate, you've been a fantastic guest. Lots of fun.
Thank you.
And thank you so much for coming on.
Pleasure.
Hey Beth, and welcome to the New Property Show.
Hi, thanks for having me.
You've come all the way down from Sydney.
I have.
A little bit of travel.
Yep.
But you run a national finance company, is that correct?
Yes, that's right.
Okay, and what do you specialise in?
So we're a mortgage management company that specialises in shared equity. So essentially we're helping people get into the property market with lower repayments in return for a share of the capital growth.
Okay, so you're behind, so you're picking up the share of the capital growth, is that correct?
No, so basically what we've done is we've looked at a way to help parents help their kids without the risk that's involved with that. So right now, the way that parents can help their kids is by doing a family guarantor or by giving a cash loan. But with that, there's that risk that's associated with it. So especially if they're doing a family guarantor, they're essentially putting their own home at risk with that child's property. Now, what we've done is rather than having the family guarantor model, we've created, there's an equity partner that we have, which is a public property trust. The parents invest within the property trust instead. They get unit allocations, they get distributions on that. And then really which is where I stand, Home Affordability Solutions, stands between the client, the child, and the parent. And that's where we get our shared equity funding from.
Excellent. And how does that? How would they engage your services?
How does it work?
Yeah.
Yep. So really, you've got your standard model to get into the property market is you need a 20% deposit. Now, if you don't have a 20% deposit, you end up in the LMI territory, right? So you get higher interest rates, you get that penalty on top of it as well. But for you to save that 20% deposit, it used to take 10 years. But now with the rate increases over the last 17 months, it's now taking just over 11 years. And in that time, if you've saved that deposit, property's gone up by almost double in that window. So what we've done is the client or the child in this scenario only needs a 2.5% deposit plus stamp duty fees. We come in with a shared equity boost of 17.5%. And then you do a standard lend of 80%. So with that, you've got your 20% deposit with no LMI included and no family guarantees as well.
It's incredible. What about, have you applied this model? Because my mind immediately goes to investment.
Yep, of course.
Has that been considered? So
absolutely.
Typically, I would recommend a client, even if it's going to be an investment, move into a property.
Yep.
I'd say a future investment property, so they don't go too big. They might go 3 or 4 bedroom, and then turn that there. But there's some people that still want to do rent vesting. They like where they live. They're at uni. They're studying. They can't get into, close to CBD in Sydney.
Yes.
It's going to be too expensive.
Yeah.
So they're going to need to go to Bathurst or regional.
Yep.
How does that, same scenario?
Well, you find that essentially with the essential workers.
Yeah.
So a lot of them do have to move outside of the CBD because they just can't afford to live there. You can use it as an investment vehicle as well. So it is opened up to owner-occupiers and investors. Same structure, still need that 2.5% deposit. We come in with that boost and then the 80% as well.
What about servicing and some of the general criteria that would go through it? So is the loan treated more like a high doc, low doc, in between? How is that vetted there? And are you using the one bank that facilitates this, or your shared equities on top of another bank?
So shared equity is used on top of another bank.
Yeah.
So basically you've got your 80% with your standard lender. They've got the 80% interest rates for that component. And then we come in with that 17.5%. Our interest rates are 3.25%, interest only. Now that's fixed for 5 years, but we'll also match the loan term of that first mortgage as well.
Yeah.
So if it's a 30-year loan term, for instance, with the first lender, ours will also be 30 years. With our product, we generally want people to refinance after, let's say, 3 years. But if they say they're not ready to refinance, right now 3.25% is a really good interest rate. So we've had quite a few people that are quite happy to stay on that 3.25. They can stay in that facility. It goes interest only for 5 years. In that 6th year, it goes to principal and interest, but it only increases by CPI. So it's a very marginal increase at that time.
It's incredible. What about your other facilities in your business? So let's say, for example, you might be writing, 10 loans a month on this shared equity? What's your percentage of other loans that you're writing in your business at the moment?
So we do just specialise in shared equity, but
Excellent.
what we're finding is it's actually quite versatile. So government's rolling out shared equity schemes at the moment. Basically, their solution is just to help people get into the property market. What we've found is that we can actually help with the servicing. So rather than doing a 17.5% shared equity, we'll go up to 37.5% shared equity. So with our servicing at 3.25%, That's obviously going to help. I mean, the banks, when you're putting in an application, they're putting a 3% buffer on their 80%, right? So if we increase the shared equity component, it means your borrowing capacity increases as well.
It's very niche, this.
It is very niche, and you still only need that 2.5% deposit. But what we've actually been tackling recently is the cost of living crisis. So there's quite a lot of people that are currently in debt facilities. When they entered into the market back in 2020 or earlier, when interest rates were below 2%, they were only serviced with that 3% buffer. We've now gone 4% higher than that. So they're no longer able to service what they're in. Right? So what we're suggesting is rather than refinancing their entire debt facility, they refinance a portion into shared equity as well and just allow that time to reset as well.
So it gives them some breathing room.
Absolutely.
There's always, and this is another topic for another day, but there's some solutions that we typically put forward, which is you've got 3 empty bedrooms. Basically a PPR can be an investment, and not only shared equity, but shared housing is another topic. But I do feel there's many ways.
Not for everyone, is it?
Not for everybody.
No.
Well, I mean, I know we used to fight with our brothers and sisters growing up, but now as adults it's a little bit different.
Sure.
But if you're putting your accountant's hat on and you can manage the personalities, it is very fruitful. Okay, one more thing there. So let's talk about paying down debt. Have you got a strategy there that you would recommend that a client does? I know you want to refinance out of your product within 3 to 5 years. But you're going to have a repeat client, because I feel you could almost transfer that equity onto another deal, so you get out of the PPR and then move that out of there. So what about wealth acceleration?
Yeah, absolutely. So what we do is we actually include the first 3 years of shared equity repayments into our facility as well. So we've serviced the client on the basis they're making the repayments on the 2 facilities from day one. So we tell them, whether they do it or not, it's up to them, to throw what they should be putting in that second mortgage into that first mortgage. So reduce that principal as much as possible, so you have the ability to actually refinance and consolidate in that 3rd, 4th year. Now, because you've done that, you've now got another option to do it again, basically. So you can use the same model. A lot of our clients, they never realised they could enter into the market to begin with. Then they've gone through this model and now they're able to do an investment property as well. And
are you doing this just predominantly on established properties, or can you consider a construction loan?
We can consider construction as well. So we've done established apartments, townhouses, construction. It's very versatile.
It's almost a product you'd almost consider, because my brain's busy with this right now, would be buying established property, even though it's the new property show. But I'd be almost servicing to purchase a house that's on an 800 square metre block, using your facility to really, it's other people's money, to create and manufacture equity as well. So I think there's a couple of good things there. Last question for you. Finance. Why have you been involved in finance for 20 years? That's a long time.
It's a long time. So really, I actually thought I'd end up as a creative, end up in fashion. I did study fashion for some time. My dad is in finance, so him and I have really worked on this product for the last 20 years. I mentioned I've got 4 kids, so having 4 kids young and trying to live off, that salary and manage finances, it was something I was really passionate about. So it's always been underlying there for me. But yeah, I really do have a passion to help people not only get into the property market, but expand on that property wealth as well.
Well, we'd definitely love to see this facility offered more in Melbourne, Sydney, of course. Queensland and Perth are some of my favourite states to work with. So look forward to doing some business with you in the future, and let's get your voice out there about what you're doing and the impact that you're making. You've been a fantastic guest, and thank you for jumping on the New Property Show.
Thank you for having me.
Welcome. This panel is going to be an interesting one. We decided on a topic, the Great Divide. What do you call it? What do you think's the divide at the moment with Australia? What's happening?
Well, I think the divide in my industry in construction is affordability of being able to afford to build, but also to be able to afford what goes wrong. And if something does go wrong, which does often happen in our industry at the moment, what do we actually do, or do we have a reserve to manage what that risk might be?
Okay.
Yeah.
Over to you.
Yeah, from my perspective, I think there's probably a bit of a divide between those who have bought perhaps first home buyers in the last 4 years and going through that trajectory of rising interest rates for the first time, meeting repayments and in a very different environment to what they have usually been in. And then you have your more seasoned owners or investors who have ridden waves like this before, and and there's money out there. There's a lot of money out there still in certain pockets. So there's a lot of difference between some of the clients that I'm seeing in those two demographics.
What are you seeing with the numbers?
Yeah, I'd have to agree.
Yeah.
I'd have to agree. There are some that are just, plugging along, doing well. Business is still going okay, and there are others that have got some legacy problems from the COVID where they aren't up to date with their taxes and they're struggling on the cash flow front, and they're trying to put measures in place to see them through what they believe will be a very difficult period over the next year or so, with interest rates being high, lack of people to employ, like the historically low unemployment has been very difficult for a lot of business owners at the moment.
Do you think too, though, in accounting that there's some, like I know we're talking about the Great Divide, but do you think regardless there's always an excuse? It could be COVID, it could be something. Some people just can't manage money.
Oh, 100%. Could not agree more. Yes, some people shouldn't be in business.
Yeah.
Those that should tend to be able to plan.
And they get through it.
And I think you touched on it earlier about having an abundance mindset, and having that mindset of getting through it, doing the work that needs to be done and making it happen, as opposed to just sitting back going, woe is me, can't make ends meet. So tend to agree.
What about you, Beth? So you're dealing with, I guess in your industry, some people actually got the money, but they still only want to tip in the 2.5%.
Yep.
And you're typically dealing with that first home buyer investor, and you're obviously doing the equity release. But some of the mums and dads you must be dealing with that you actually access some cash, they must be in some pretty good positions too at the moment.
We've actually got quite a wide range of clientele. So, you're right. There's definitely those ones that are trying to save that deposit and they're struggling. Interest rates have gone up, so their servicing, the borrowing capacity has lowered as well. So not only are they trying to get that deposit, they're trying to service a loan anyway. So we've got that, but then you've got the investors. Like, it really is an investor market at the moment. A lot of people are selling because they can't make their repayments on their mortgages, so the option is to sell. So investors are able to swoop up and grab it.
I think that's one of the other challenges too. Is and we'll go back to the subject, but if people are selling their homes, it actually puts a big demand onto rental properties.
Absolutely.
So it actually doesn't help. Like, we think it solves one problem, we just move one problem from here. And then the rental increase has gone up, which is obviously causing another divide at the moment as well. But something you touched on before was having the protection in place if something goes wrong. So we're talking about if everything goes right. So in some of your instances, some of the clients that you're dealing with, they're having not necessarily mistakes, but $300,000 to $400,000 to $500,000 increments where their building costs have gone through the roof, or they've decided to do that. Where do they access that money? Are they doing lines of credit? Do they have the funds available? Or have they already got some savings put aside? Like, fundamentally, do they have a good asset base, or they've got something backing them?
Well, I think a lot of the people, not so much our clients, but people who have had difficulty with, excuse me, people who have had difficulty with builders that have collapsed whilst under construction. I think they've had to rely on family, rely on, maybe have another investment property they've had to sell, but the cost of a build collapsing and then another builder taking over is far more expensive than the balance on their build. So you not only have the extension of your funds, but also you have all the consultants that go along with it, and you have all the emotional turmoil, and you have to manage renting for longer periods while your house is in limbo because it hasn't been built. So I think you need to be very risk adverse with it, but also it's very timely to be cautious that when you do build and when you start at the start of the project, when you're getting an architect or selecting a design, make sure you do have a contingency. You don't say, I want to spend this much on my build. You actually find out what you can get for your money, not I want that and this is what I want to spend. So I think that that's where the reality check really needs to come back to people and say, yes, this is how much my build will cost from the start. Do cost measures, feasibilities all the way through the project, but also have a contingency. What happens if things go wrong? Because if things go wrong, you're left with half a house that you can't afford to finish, and what happens to it? All your money is there, and it's, you know, there's nowhere to go with it.
And typically I'd normally obviously speak in the positive, but let's reverse this and speak to those viewers that are currently going through some troubles. And just to warn them very lightly about the consequences of when things go the opposite direction. So we've talked about abundance. Let's talk about if things start to go wrong. You might see it, somebody's put a 10% deposit down, they've now got a baby on the way, that deal's about to fall over. What's some of the ripple effect if you don't get your stuff together that could actually affect people in the future? What are the consequences if things go wrong?
Yeah, I mean, it all comes down to having that buffer of savings. And, you know, there was data released actually last week that showed just how much Australian savings accounts have rapidly declined. So people are clearly digging into those savings to meet their repayments or whatnot. But look, I'm not seeing any really bad mortgage distress at this point, and certainly no repossessions or anything like that. But what I am trying to say to a number of people at the moment is that if things are getting tight and it does look like it's going to get a dire set of circumstances, get on top of it now. Like, work out what downsizing looks like, work out what your new borrowing capacity or level of comfort looks like, and be in a position where you're in control of what happens to your property, and don't put it in the hands of the bank. So I've spoken with a few clients about that who are starting to feel a bit tight about their repayments, but it's just making sure that you're in control and plan before anything disastrous happens.
You have to be careful with the distress, because once you get into distress, the mind's not thinking as well, and the mistakes really pull apart. And what about yourself? So with you've run the numbers with people.
Yep.
They don't follow your plan.
Yeah, happens more often than I would like. Absolutely.
So, how do you rein them in? Are you gonna bring them into the office more and have more coffees with them, and you really almost have to manage people?
Absolutely.
Yeah.
It's managing people, you manage their numbers, you speak to them regularly, you look at their metrics, you try and get them under control. You talk to their mortgage brokers to make sure that they're getting the best deal they can get. You look at things like converting them to interest only instead of having principal and interest payments to give them the cash flow flexibility moving forward. You look at their cost, like what they spend money on. And I think, you know, when you say people are dipping into savings, I think that across the board we have got a very big spending culture.
Absolutely.
And that then feeds into the fact they can't afford houses because they're not sure how to save. And they will go out, and I think that, you know, the thing about having the smashed Avo at $20, like that all feeds into this mindset that we have to have everything now. And I try to get them reined in and go, well, what's your purpose? I mean, where do you want to be in 10 years? Let's work towards that. And if it means you sacrifice something now, you'll actually get there.
I think a good thing to have on this show would really be a really good budget tracker.
Absolutely.
Because we all know how to spend it.
Absolutely.
But it's even us would be guilty today. A few coffees, a few sandwiches.
You start adding
it all adds up.
Of how to budget.
Absolutely.
And even if it was a negatively geared property, which I don't push, but let's say you're spending $70 a week, negatively geared.
Yeah.
But you can afford the finance. That $70 there could essentially finance a $700,000 to $1 million property if it was negatively geared, if it was paying for itself. And you could be a few coffees and a hamburger away from actually acquiring wealth. So I think I guess the message I'd want to convey is do something like what I'm hearing from you, is do something now. What's a major change, not minor, that you could make that's going to impact your future? So, not that I'm against the rich, but I think we need to have the rich mindset, wouldn't we? We need to be thinking about how to create wealth, how to spend a little bit more, spend less money, a few little smashed avocados. But really having a team around you that can support you. So just before we wrap up, who do you go to for advice? I'd love to hear. There's that one call you need to make. You need some help. You're feeling stress. Are you calling mum, dad, a friend, or a financial advisor? Just a personal question. Who do you call?
Well, if I'm stressed, I usually talk it out with my husband.
Yeah, sorry about that. Okay, it's all happening on Channel 31. All right, over here.
Work colleagues, because
Work
we've all
colleagues.
got a very similar mindset, and they can usually, steer me down the right path if I'm feeling stressed about anything.
Excellent. Yourself?
Yeah, I'm with Adel. I talk to my husband.
Perfect.
Poor guy.
And yourself?
I've been the husband as well,
Yeah.
but also my trusted girlfriends that we can
Yeah.
have a bit of girl code and, share each other's
Get it all
Yeah.
out.
Yeah.
So,
little wines or something.
100%. So, not that we're supporting drinking here on the show, but no, that's it. But what we're saying is you've got to talk about
it.
You've got to talk about it.
Yeah.
So the message we want to get out is the Great Divide is really just perception. Okay. All it is where you are to where you think you'll go. The divide is you. That's my message. So thank you, girls. You've been fantastic. I'll see you again soon.
Thank you.
Thank you.
That's all for this week, and thank you for joining us. If you want to see the full interviews, check out our website, thenewpropertyshow.tv, and we'll see you again next week.